One day, Rahul made a trade in Nifty options. But as soon as he did, he started to worry. His first question was, where should I set my stop loss? If Nifty moves 100 points, how much will my option premium actually change? If Nifty moves opposite to my view, how much might I lose by the end of the day? If these questions sound familiar to you as well, you're not alone. Hey everyone, my name is Kashif. In this video, we will discuss how to better understand option prices by learning the basics of option Greeks. And to help you do this, we have just launched a new feature, Option Greeks, right on our platform. Now you can see the real-time Greeks data for any option we discuss. Unlike equities, options don't move point to point. Sometimes the price rises faster than you expect, and the other times it falls sharply, even though the market barely moved. So why does this happen? Option premiums are influenced by multiple factors, not just price. They react to the underlying price, the time left until expiry, market volatility, and even interest rates. And this is exactly where the options Greeks come in. The Greeks are like the backbone of an options premium. They explain every twist and turn in the price. There are four main key Greeks: delta, gamma, theta, and vega. Let's first talk about delta. We all drive a car or bike and see the speedometer, right? Speedometer tells us about the speed of the vehicle. Similarly, delta is like the speedometer of an option. Delta tells you how much the option premium will change for every 1 point move in the underlying asset. For example, if a call option has a delta of 0.5, then every 1 point move in the underlying will move the option premium by 0.5. Delta is important because it helps you instantly estimate the profit or loss you will make based on market movement. It's also the foundation of hedging and strategy building. And when traders want to profit in a sideways or consolidating market, they often deploy delta neutral strategies or rebalance their positions based on delta. Our second Greek is gamma. Now, if delta is the speed, then gamma is the accelerator. In physics, acceleration is the change in velocity with respect to time, right? Similarly, gamma measures the change in delta with respect to the underlying price. For example, if delta is 0.5 and gamma is 0.02, then a 1 point move in the underlying will increase delta to 0.52. High gamma means your option premium can change very quickly. Near expiry, especially at the money strikes, even a small move in the underlying can change the option premium dramatically. This is often called the zero or hero trade for option buyers. Now let's talk about theta, the clock. Theta measures how much value an option loses as time passes, assuming everything else stays constant. Both calls and puts lose value as expiry approaches. For example, if an option premium is 100 and theta is 5, the premium will drop by 5 points per lot every day, even if the market doesn't move. For option buyers, theta is the enemy, because in option buying, you pay a premium and its value decreases with time if the market does not move in your favor. Your premium melts like an ice cream. For option sellers, theta is friend because the seller receives the premium. Now let's move on to the fourth Greek, vega. Vega measures how sensitive the option premium is to changes in volatility. For example, if vega is 12, then a 1% rise in implied volatility increases the option premium by 12 points per lot. This becomes very important around big events like earnings, elections, or central bank announcements. During these times, uncertainty increases. Implied volatility rises, and premiums for both calls and puts start climbing. So when you put all four Greeks together, delta, gamma, theta, and vega, you can finally understand why option premiums behave the way they do. And here's the best part. With share market, you don't need to calculate Greeks manually. Our platform shows you each Greek directly on a per lot basis. That means you can see their impact in rupees per lot, making your analysis faster and much clearer. No more trading blindly. With Greeks built right into your option chain, you can plan smarter trades, manage risk better, and build strategies with confidence. Check out the new Options Greek feature today on the Share Market app and take your trading to the next level. For a better understanding, please read out our detailed blog post on Greeks, which is linked in the description. Comment below and tell us which Greek we should do a deep dive video on next. We'll focus on how to use it to build and manage your trading strategies. See you in the markets.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.